Vito Sperduto is here. Vito, good to have you on. Really appreciate you joining us. Thank you very much.
Thank you for having me. I think I'm going to bring you out to hype me up like that every time.
That was good, right? Let's get ready to rumble.
I love it.
But you would note that, unfortunately, I've got to temper those numbers a little bit because those numbers are for the big deals. Are deals under $1 billion getting any traction?
Yeah, I mean, as you noted, deals over $5 billion are up 50 to 70%, depending on whether you look in the U.S. or global in total. And deals that are $1 billion or less are actually flat year to date. And I think a lot of that has to do with the fact that the largest corporates had cleaned up their balance sheets, were prepared to do deals, and they're executing on transactions they've considered for some time. I think the $1 billion and below are having a more difficult time with the volatility and adjusting to the swings that are happening quarter to quarter. Hopefully that changes on a go-forward basis based on what we're seeing.
Last week, I was hosting Fast Money, and one of the traders, Tim Seymour, said, well, I don't even know why we're talking about small caps, and we kind of gave him the business about it. Yeah. But he made a good point, I think, which is these companies, listen, $1 billion is still a lot of money. For the founders of those companies, for the CEOs, and for the employees that may own stock, it matters. How do we get a little more deal-making attention to them?
Well, I think what's going to happen in the remainder of this year and the beginning of 26, we're going to see those companies probably be more active. They actually fit a great profile of being companies that are excellent acquisitions or bolt-ons for much larger companies. A lot easier to execute that deal than something large and transformational. And depending on what you think is going to happen going forward from a regulatory perspective, doing something that's bite-sized is easier to get done than necessarily something that's going to put a large target on you.
The IPO market feels like it's come back.
Yeah.
I mean, we've had a few failures, but most have been pretty wildly successful.
Yes. And I'd say so far, September to date, and we still got a week to go, has been the most active time period for IPOs this year of any month. And a lot of that is just driven by, I think a lot of folks are waiting to monetize, and they feel the conditions are strong. I mean, I was joking to you before, our two co-heads of equity capital markets are nonstop on planes, just given the level of activity that's going on. And I think, part of it, Brian, is that there's so much money on the sidelines waiting to invest in these offerings. And so
what are they waiting for?
They're waiting for an opportunity to put money to work that they've been tasked with giving a return to their investors on. And they haven't been able to put it to work at the same frequency that they had historically. I think when you look at the rate cut that happened last week as an example, everybody's kind of asked, well, does that mean that we're off to the races? Well, conditions were really strong already. Maybe it's an indicator that we're going to see a little bit more activity. And maybe it's an indicator that, hey, we're actually going to see a time period that's a bit more smooth sailing going forward.
Does the Fed rate cut matter at all?
It does in terms of helping companies position. I think the smaller companies now can borrow at some better rates for a time period. I do think if you look at Thursday of last week, the day afterwards, there were 9 investment-grade issuers that did $15 billion in capital raise that day. And they specifically, a few of them, talked about earmarking that to term out debt that was coming due, but also to prepare for upcoming acquisitions. And so I think the conditions are just fostered a bit in that regard, and it helps. The other thing I'll tell you is where we're tracking this year, we'll probably end the year up about 25% over last year in overall deal volume. If we are up 30% next year over 25, we're going to hit the levels we had in 21, which is the best year in history by a mile.
Quickly, you saw the top of the show. I would imagine you guys are the biggest, you're the U.S. head of capital markets, but you're the biggest bank in Canada. I think you're the biggest company.
Largest company.
Largest company in Canada. Are you beefing up the energy team? Because feels like there's a lot going on there.
Well, I would say our energy, power, and utilities have just been some excellent, strong businesses for us historically and going forward. As your guests noted in the segment a couple segments ago, the bottleneck is power on the AI build-out and really finding how you're going to power the build-out, how you're going to take care of the infrastructure. And those are our strategies that we're focused on, strategies our clients are focused on. And so I think we're well prepared and well positioned for it.